Hello, this is Go Getter Excel, and we are treating past question on ICANN ATS examination. This is March 2020 insights on ATS3 taxation. So we are doing the calculation stuff. We've done question number 3, the previous video, and question number 4. Now let's look at question number 5. In question number 5, this is Apex Limited has been in business for many years. It is engaged in the importation and distribution of shoes. Owing to declining sales, the company decided to cease trading. So now this is cessation of business. So this is cessation of business. They decided to cease trading. Now, what do we know about cessation of business? Cessation of business, you will need to look at something called ultimate year, which is the year the business ended, and the penultimate year, the year before the business ended. Now, that is what we are going to be looking at. Now, but in the coming in of Finance Act 2019, all that changed. So if you look at the question, they decide to cease trading. They have not made up their mind. So they want to cease trading either on December 31, 2018 or February 28, 2019. All of this is still covered in the old Finance Act. So it means that we are going to be looking at the penultimate year and ultimate year. All right, so recent account adjusted for tax purpose revealed the following adjusted profit. So look at all the adjusted profit for tax purposes. Now, we are required to determine the assessable profit for the relevant years of assessment and indicate what difference it would make if business ceased on February 28, 2019, assuming the profit of 35,000 naira for 5 months to February, assuming that's a profit. So this is 3 months, which is 15. That would mean that the additional 2 months, if you add if you add 20,000 to it, that's for 2 months. That is what makes it 35,000. This is to February, this 35K, this is to February 28, 2019. Okay, so that being said, now let's look at the accessible profit for the year, for the relevant years of assessment, and indicating which of them will be okay to cease business. So now let's look at the option of ceasing business um, in December 31st, 2018. Okay, so we'll say option of ceasing business on December 31, 2018. So if that is the case, we'll say date of cessation is 31/12/2018. So we know that ultimate year, here is the year of cessation. You see, year of cessation is 2018, right? That means penultimate year, which is the year before cessation, should be 2017. So we need to be very careful when we get to 2017. We know that that is the penultimate year. So I will put this is accessible profit, accessible profits. So this is my 2 naira sign. So I will come here. This is year of assessment. So what do we have here? We have up to 2014 September. Of course, this should be 2015, and here should be 2016. So we know, of course, this should have been 2017. Here should be 2018, and here 2019. So we'll start from 2015, right? 2015. 2015. What were we given? We are given 80,000. So we just put it straight. 80,000. Then we are 2016 is 75. 2016 is 75. Now for 2017, which is the 2017, I'll say 2017, I'll call it penultimate year, PUY, penultimate year. We'll treat it two ways. It will start from PYB. PYB 2017 will be the one that ends in 2016. We have 40,000. So for PYB, we have 40,000. Then we will now treat AYB. AYB, that's the actual year basis. We will now start from 2017 January 1. Where can we get 2017 January 1? Of course, we'll get it in this year ended September 2017. So that means from January to September is 9 months. We are taking 9 months out of this 56,000. So you will say 9 over 12 times 56,000 plus we need to look at the remaining 4 months, which is from October, November, October, November, December. That's 3 months. 3 months out of this 42,000. So you say 3 over 12 times 42,000. Need to check if it is 42. Yes, it's 42. So what would that be? We activate our calculator now. 9 divided by 12 multiplied by 56,000. That gives us 42,000 here. So it means this is 42,000. This is 42,000 plus. Now let's see the second one. I need to copy this because I'm going to add it to the other one. Okay, so 3 over 12, I will just say times 3 divided by 12 multiplied by 42,000. 3 divided by 12. So that gives me 10,500. This is 10,500. So when I add 10,500 to 42,000, I will be having 52,500. That is 52,500. So this is PYB, this is AYB. So which of them are we going to choose for that year? We are going to choose the higher of the two. So choose the higher. So we will choose 52,500. All right. Then we will now go to the ultimate year. Ultimate year is 2018 because we said here option December 31st, 2018. That is when the business ceased. 2018, I'll call it ultimate year. It's going to be on actual year basis. So it's going to be from January 1, 2018 to December 31st, 2018. So we have here September to 2017 down to, sorry, October 2017 down to September 2018. We're going to take only the 9 months here. We will take 9 months out of the 42,000. So that will be 9/12 times 42,000. Then whatever we have, we add these 3 months to it, which is 15,000, because our destination is to end at December 31st, 2018. So we are checking 9/12, 9 divided by 12 multiplied by 42,000. That gives us 31,500. 31,500 now plus 15,000 plus 15,000, right? That will give us 46,500. 15,000, yes. That will give us 46,500. 46,500. 46,500. So if we look at it now, in this question now we have used everything from 80,000 down to 15,000. Everything was included in our calculation. So what is your accessible profit for the period? You say accessible profit, total accessible profit for the period, total um, accessible profit for the years of assessment 20 what? 2015, 2018, 2015 to 2018 happen to be 80 plus 75 plus 52,500 plus 46,500. That will give us, let's do it again, 80 plus 75,000 plus 52,500 plus 46,500. That gives us 254,000. So 254 254,000 is your total accessible profit, right? Then we look at the option for option for ceasing business on February 28, 2019. Of course, we then know that the date of cessation is okay. Let me use this kind of date style: 28 to 2019. So this is ultimate year. Ultimate year is the year the business ceased, 2019. And ultimate year is the year before the business ceased. So we need to get that straight. So now let's calculate our accessible profit. All right, so we have our year of assessment. We have our 2 naira sign here. So once again, we have 80 and 75 for 2015 and 2016. 80, 75. So this is 2015, 2016. Then we'll go to 2017. In 2017, we have 40,000. We have 40,000. Okay, 40,000. Then we go to 2018. Go to 2018, which is the penultimate year. So we start with preceding year. We start with preceding year basis. Preceding year basis. So we'll need to look at preceding year basis. Of course, 2018 year of assessment should end 2017, September 31st, 2017. So that should be 56,000. So we have our 56,000 here. Then we'll now look at the actual year basis. The actual year basis, be looking at January to December. January 2018 to December 2018, we'll start from here. We'll take 8 months of this 42, 9 months of this 42. So that should be 9/12 times 42. Of course, we will now need to take this remaining 3 months, which is 15,000. We've done it before when we are doing this, which is the same thing as 46,500 actual year basis. 46,500. So if you look at it now, this is 46,500. So choose the higher. Choose the higher, which is 56,000. Of course, when we are doing the other one, we choose the higher in 2017. So now we are doing 2018 as an ultimate year. So our 2019 is the ultimate year. So the ultimate year, it will be from January 1 to when it ceased. January, February. Okay. So January, February, we have 20,000, because we say this is um 5 months money, which is 15,000. Hmm. So that means 3 months money would have been here. But now look at the way we are going to do it. Instead of taking this 20,000, we will say, because they gave us 5 months money up to be 35,000, we will even say two. Okay. So first of all, say this is actual year basis. Actual year basis. We will say out of the 5 months, we need just 2 months times 35,000. So that will give us 2 divided by 5 times 35,000. That's 14,000. We would rather take that. 14,000. We would rather take that than take the extra 20,000 I put down here. Of course, here they said 3 months to December 31st is 15,000. And if they are saying 5 months to February 2029 is 35,000. Normally, common sense should tell us that if you remove 35 from 15, you will have 20. But if we are joining them together and using our average analysis that we are using, I say 2 over 5 times 35, then we'll take the 14,000 because it's very low, lower than 20,000. So we'll now check the total accessible profit for years of assessment 2015 to 2019. So we'll check again. We have 80,000 plus 75,000 plus 40,000 plus 56,000 plus 14,000. That gives us 265. 265. So 265 is what we are paying here. This is 254. Which one of them should you want to opt for? Now let's look at the analysis of what we want to opt for. Okay, so it means here that this is options to cease business, cease trade. We have two options: December 31, 2018, February 29, 28, 2019. These are the two options. Okay, so adjusted profit. Adjusted profit. Now, if you want to look at the adjusted profit, these are the profits that were adjusted for business purposes. So if we are to add all of these here, what will it be? 80 plus 75 plus 40 plus 56 plus 42 plus 15. Now this gives us 308. For here, okay, this is 308. Of course, the difference between here and that of 2019 is just 20,000 difference that made it 35. So 308, I can decide to remove the 15,000, then add 35,000, 328. Or I can just add the 20,000 straight. So this is 328 here. So this is 328,000. So these are the adjusted profits. Then this is less accessible profits. Okay. Adjusted profit is the one we just adjusted and are calculated. Accessible profit is those ones that we calculated now based on the year we cease business. Some of them is actual year, some of them penultimate year. Let's look at 2020, 2018. We have 254. 254. So we have 254,000. Then for 2019, the one option, we have 265. We have 265. So normally, your adjusted profit is supposed to be your accessible profit, assuming you were still doing business. If your business is continuing, that adjusted profit would have been your accessible profit. But because you now decide to stop business, your adjusted profit might be different from accessible profit. So it means your accessible profit might be smaller than your adjusted profit. So normally, if this was supposed to be taxable, but this is what we are now being taxed. So let's see the untaxed figure. So this is profit that escape tax. So this is what we are supposed to tax, but this is what we now tax. So which profit will escape tax? We have 308,000 minus 250 minus 254,000. So it means that here 54,000 is escaping tax. 54,000 is escaping tax. Then in the case of here, we have 328,000 minus 265,000. 63,000 is escaping tax. 63,000 is escaping tax. So the question is asking us that as determine the accessible profit for the relevant years of assessment. We've done that and indicate what difference it will make if business ceased on 28 February 2019. So if business ceased on February 28, 2019, the profit that would escape the profit that will escape tax is 63,000 naira compared to 54,000 that would escape if it ceased on December 31, 2018. If it ceased on December 31, 2018, if it ceased on December 31, 2018, this is let me put a space more, and that's say IE 63,000 minus 54. This is 9,000 naira more than that of 2018. Hence, the company should cease on February 29. So that's the answer to that question. So we've done that. Now let's look at the next question, which will now be the last for this. It's going to be the last for this class. Mr. Elvis Marvel completed his degree program at one of the private universities in Ogun State in 2018. After waiting for a while to get his results released, he applied for employment as a temporary laboratory attendant in the same institution on a salary grade level 01 step 4. He accepted the offer and assumed duties on January 1, 2019. So this is when he assumed duties. Details of his employment contract for the year 2019. Of course, this is employment. Employment is on actual year basis. Now, this is salary per annum, pension 8%, contribution to National Housing Fund 2.5%. Mr. Hayes has an aged mother whom he spends only 2,000 naira per month on her upkeep. Is married and has 5 children and has a child age 5. We are told to compute the annual pay, the annual tax payable by Mr. Hayes for the assessable year. That's what the only one we are going to do. We are not going to talk about the least the benefit of applying computer models in tax administration. We are strictly looking at computation. So we take this A part, tax payable by Mr. Hayes. So we'll go down here and let's use this. So this is question number 6. Mr. Hayes Marvel. Why is my line not straight? Mr. Hayes Marvel. We're looking at tax payable on year of assessment 2019. Let's say employment, or say payee. So this is payee we are looking at. So I can put my 2 naira sign. I like that 2 naira sign. So let's check the income. We have salaries per annum 230,000. Salaries per annum 230,000. Let's see if he has other income. no other income. It's not giving benefit in kind, so that's the only income. So now less tax exempt items. Those tax exempt items, we have pension 8%. So we have pension, that will be 8% of 230. And what would that be? 0.08, that's 8% of 230. That will give me 18,400. So here is 18,400. The next one is let me see, we've taken this National Housing Fund. National Housing Fund, we are told is 2.5% of 230. 2.5% happens to be 2.5. 2.5 divided by 100 multiplied by 230,000. That will give me 5,750. 5,750. Okay, so we've done this. So let's look for his gross income. We need to add this here. So what do? Let's add this to 18,400, 24,150, 24,150. Of course, these are not the only things that are supposed to be here. We have the National Health Insurance Scheme. It's not given here. We have the life assurance. We have the gratuity, but they are not shown here. So when we remove this, we are removing it from 230. That gives me 248,400. So 248,400. Is that supposed to be so? No. Sorry. 230,000 minus 24,150. That gives me 205,850. 205,850. 205,850. Okay, 205,850. So that's your gross income. So the next thing we'll remove is our CRA. So less CRA. Now CRA is the higher of two things. So we choose flat rate, which is 200,000. We're going to compare this with 1% of gross income, which is like 0.01 times 205,850. So when we look at that, look for, so this is 2,059. So that is 2,059. So which of them is higher? Choose the higher. So the higher here is 200,000. So after choosing the higher, we need to add 20% of gross income, which is 0.2 times 205,850. So if this is 1%, I multiply this by 20, that gives me 20%, 41,170. 41,170. If we still doubt it, let's do it again. 205,850 times 20 divided by 100. 41,170, as we said before. Add it to give you 241,170. So we are going to take it down here. 241,170. So your gross. So now this is what you are supposed to have as your CRA. Okay, let's look at this question again. This is per annum, that's fine. I want to be sure that this is per annum. Okay, there's nothing to fear. All right, so 200 plus 20% of this, 41,170. So now you check your gross income minus your CRA. So your taxable profit is nil. So what it means here is that your gross income is lower than your taxable, than your CRA. Now it's going to give you nil. That means your tax, which is payee, should be nil. So that's just it. That's just it. Now your tax payable is nil, which is your payee. But because you don't have a chargeable income, we need to look at the minimum tax. The minimum tax here is 1% of your consolidated income. I'll call it consolidated income, which is going to be 1/100. Let me just still use the, which is going to be 0.01 times 230,000. So let's look for it now. 230,000 times 0.01. That will give you 2,300. So this is what you should be paying as your tax. So with this now, we've come to the end of the May 2020 past question insight for ATS3. So please practice, practice, practice. And as we prepare you for the next question, please do keep watching our videos and subscribe to our YouTube channel if you have not done that. Thank you so much.